Hi and welcome to the Market Alert for Thursday the 13th of April 2023. So yesterday was CPI and headline CPI tumbles more than expected, but real wages decline for the 24th straight month. More on CPI, headline CPI missparks, dovish chaos in markets, golds and bonds and stocks all saw what they did. Hawkish Fed speak and recession fears spoil to cool the CPI party. So the markets rallied and then Powell came out and said he was going to continue to raise rates. US stocks were ultimately lower on Wednesday, fading the post-CPI rally. As Powell says he's not done with raising rates. And stocks and bonds unwind CPI rally, but dollar fails to recover. Nope, that's because it's a dying currency. So yeah, just to summarise, the markets were bullish after the report. No surprise there, it came out 1% lower. And then, of course, the FOMC meeting minutes later in the evening spoiled the party, as we saw Powell reiterate and continue to say that interest rates are likely to continue higher. News for today, we've got, let's just make sure the times are correct. We've got GDP for the UK. This is out at 7 a.m. and then we go over to the US for core PPI, etc., etc. And unemployment, G20 meeting, and then we've got a 30-year bond auction as well later in the evening. But let's have a look at the market's reaction to yesterday's CPI numbers, which, let me just remind you what they were. They came out at 5.01% drop year on year for yesterday. So that was enough to send the market launch to the upside, but failing to hold because of, say, what Powell said later on at the FOMC meeting minutes from March. So in the Dow, the market yesterday, you can see prices rallying up, then coming back down. They're up on the overnight, but failing to hold there at 78. We didn't get to 89, but 78% we went through, and then we came back. This is what it looks like in the 30-minute chart. Market moving up 200 points there, and then trading sideways until the Dow opened, then it sold off, and then we came back, and then we sold off with the FOMC meeting minutes later on in the evening. However, the market's come off the low, the 200 MA, and also the BRN there at 33,800, and is starting to make its way back to the upside. We've got the DP in the way here, the R1 and the high, and then of course you've got all of the BRNs in between if the market can actually muster the momentum to continue to move to the upside. And in the implied volatility, which we haven't looked at for a while, you can see there that we're down at 1446. We've been dropping down from 1572 over the last few days. So yeah, we're back in that area where we can expect to see some sort of correction. And I mean, the market just moved up for the last few weeks. Needs some form of pullback to be healthy. And there's certainly signs of that in the implied volatility. In the German DAX, this also up yesterday, then back down towards the open and up off the lows on the overnight. Again, you can see yesterday's reaction to the upside, and then the market coming back below the high after the FOMC, but finding support at the low of yesterday and moving back up towards the 15,700 level there for the DAX at the moment. Overnight in the 5-minute chart, you can see the market moving up there off the low. A bit of a spike in volume at this area. That's how important it is. And also the close. Getting back above this, turning green, and then moving back to the upside. Market's reaction yesterday in a more micro look. You can see, again, coming off the DP, the 200 MA on previous occasions, including the CPI numbers. And then as we got into the evening session, late afternoon, again coming off the close, the DP. Again, just showing you this to reiterate how important these areas are and how the market can struggle with these areas or find support and resistance as well. In the S&P 500, the same as the Dow, up on the overnight, getting back above the low, which you can see there, and the close. Yesterday's market action doing nothing until we had the CPI numbers. Then we sold off back to the low, where the market then found support and traded up to the high of the previous day, and then moved sharply lower, taking out the low, and then sitting at the S2 before the market then starts to move back up off the low and close there. In the currencies, up for the GBP JPY yesterday, trading back up to that 166.0404. In the 30-minute chart, we sold off initially, as you would expect. Then we had a rally all the way back up to the R1, and then back down to the close, where the market overnight has continued to move to the upside, also above the DP at the moment to the close, and the two averages. In the pound, also moving sharply to the upside as the dollar sold off with the CPI numbers, because the market interpreted this as no further rate increases. But of course, that's going to be not the case, as they found out at 7 p.m. last night from the March FOMC meeting minutes. The market trading at 89% there, 78.89. And in the 30-minute chart, you can see the morning sell-off. But at the S1, the buying came in and launched the market back up above the close, and the R1 there, and also the high of Tuesday. And overnight, the market's moving back around about 78-89% there, isn't it? Yeah, in that area. So we're waiting for the GDP numbers from the UK at 7 a.m. In the US dollar for yesterday, you can see the market was down. We've got a bit of a double bottom going on here at the moment. You need to watch this low over here. This area here of 100.875 is going to be an important area. The market will need to stay above this, otherwise we will be heading lower. You can see it's been a while since we had a low in this area, and let's just drag this back a bit more. So we're looking over here, which takes us back to May of last year. Once broken though, what's interesting is looking at the daily chart here, and we've broken through the 200 MA. So the dollar certainly in a bearish phase at the moment, which is great news for the metals. And starting off with silver, another move to the upside, managed to maintain it yesterday, but despite a bit of a sell-off initially in the morning, which to be expected, down to the close of Tuesday, and then the CPI numbers, then it was crushed all the way back to the high, which came support. Not only was the high support, but it was also, if you look there, it'll be bang on 89% retracement. The market then making its way back up, needs to get back above that 25.50. But at the moment we're above the DP and the averages, which is enough to send it back towards the high. Amazed that it's being allowed to move up, but it is, as I record. Gold also yesterday moving back up to the 89, this time on the upside, 2026, and then above the low on the overnight as well, which you can see there's the low for yesterday. Market way above this, above the close and the DP. But yesterday, no surprise, bringing the market down. Then we had the CPI numbers. Then we bring the market all the way back down to the close and the DP. And then we get the retracement, and we make our way back to the upside there. So in the gold silver ratio, down at that 79.35 level. So still moving to the downside. Been a nice move down. That shows that silver is accelerating on a percentage basis faster than gold at the moment. Okay, that's it for this one. Let's see what the GDP numbers and the PPI numbers from the US this afternoon do for the markets. But other than that, as ever, thanks for watching. See you in the next one.